Today, we're going to run through a critical scenario analysis. We're talking about a potential black swan event, one that connects a geopolitical flashpoint in the Middle East directly, and I mean directly, to an invisible kill switch for the entire AI revolution. Right now, the market consensus is crystal clear. The AI supercycle is basically seen as an unstoppable force. You look at the hyperscalers, their spending on data centers and AI capacity is already staggering. And the projections? We're talking about blasting past $1 trillion by 2028. This isn't just big, it's the biggest capital expenditure cycle in the history of tech.
But here's the thing, and it's a huge thing. It's a strategic fragility hiding in plain sight. That whole trillion-dollar bet, it all rests on just a tiny, tiny geographic footprint. You've got TSMC in Taiwan, controlling over 90% of the world's most advanced chips. And then there's SK Hynix in South Korea, shipping out 57% of all the high-bandwidth memory, HBM, which every single AI accelerator has to have.
So that's the core question we're digging into here. What happens? What really happens if the lights go out in those factories? What if the physical world suddenly and violently interrupts this digital supercycle we're all betting on? And look, this is not just some academic exercise. Even before we get to the geopolitical stuff, top execs are already sounding the alarm. You see this quote from Micron's EVP? He's talking about a structural crisis. The supply of memory for 2026 is, well, it's already sold out. The system has absolutely zero slack. And that, right there, is before we even add our geopolitical catalyst into the mix. Okay, so let's wargame this out. Let's look at the first few weeks of this potential crisis. This is where you see the political promises slam right into the hard reality of physical energy stockpiles. This is literally the countdown to shutdown. Okay, picture this. It's late February 2026. A long-simmering conflict between Iran and Israel finally boils over. Operation Epic Fury begins, and within hours, boom, the Strait of Hormuz, which is the choke point for something like 20% of the world's oil and LNG, is effectively a no-go zone. By March 5th, LNG traffic through there has collapsed by 95%. Just like that, the main energy artery for all of Asia has been severed.
Now, as you'd expect while all this is happening, the officials are rushing out to reassure everyone. On March 4th, you get this definitive statement from Taiwan's Minister of Economic Affairs. This is the classic political promise, right? It's exactly what the market wants to hear. And for a little while, it actually works. People believe it.
But look, as strategists, we don't trade press releases. We trade physical reality. So let's just push past all the talk and look at what's actually sitting in the tanks. Let's look at the inventory.
And this is where you see the jarring disconnect. I mean, sure, Japan and South Korea have plenty of oil reserves, but their real vulnerability? It's LNG. That's what powers their grids. South Korea has maybe 4 weeks of reserves, but Taiwan, the absolute linchpin of the entire semiconductor world, has just 11 days. That's it. That is the real countdown we should be watching.
And the fallout from this isn't theoretical, it's immediate. Within days, you start seeing force majeure declarations just ripple across Asia. Petrochemical plants in Korea, then Indonesia, they just halt production. India's biggest LNG importer says it can't fulfill its contracts. You are watching the physical supply chain break in real time. So now we get to the really critical part. This is how a regional energy crisis spirals into a full-blown global technology shutdown. This is the semiconductor energy paradox in action.
You have to understand, modern semiconductor fabs are just incredibly thirsty for power. I mean, in Taiwan, the industrial sector uses more than half of the entire nation's electricity. And of that slice, the semiconductor industry alone eats up over 41%. Get this, a single company, TSMC, consumes more electricity than many small countries. It's insane. So when a grid gets unstable, these fabs are the first and biggest vulnerability, period.
And here's the kicker. You can't just flip a fab on and off like a light switch. A power flicker, even for a second, isn't just an inconvenience. It's a multi-billion-dollar catastrophe. It ruins every single wafer that's currently in production and can seriously damage the hypersensitive equipment. A full recovery, what they call a cold start, can take over 3 months. 3 months of zero output. Okay, so let's connect all the dots, right? 1. The Hormuz blockade stops the LNG tankers. 2. The reserves in Taiwan and South Korea run dry. 3. Governments are forced to ration power, and that means shutting down the fabs.
And 4, with TSMC and SK Hynix offline, NVIDIA literally cannot get the components it needs to build its AI chips. And just like that, the entire US AI boom, it just grinds to a halt. Now, to be clear, a crisis like this probably won't end the AI supercycle, but it will absolutely, violently reshape its geography. The map of who wins and who loses in AI, it's about to be completely redrawn. The new dividing line in the market becomes incredibly simple. It's just one question. Are you insulated from the Strait of Hormuz, or are you exposed? That's it. On one side, you've got the asset-heavy guys, the ones with fabs in energy-secure North America. And on the other side, you have all those high-flying, asset-light, fabless companies whose entire business model has just poof, evaporated. So this matrix basically lays out the trade for you. The winners? It's the US onshore manufacturers. You're looking at Intel Foundry, which overnight becomes a strategic national asset, and Micron, which is really the only major US-based memory producer. The losers? Well, it's the Asian giants, TSMC, Samsung, SK Hynix, and the entire ecosystem that depends on them, all the fabless designers, all the AI software firms. They are now completely starved of compute. Okay, so how do you actually translate all this analysis into an executable strategy? Let's get practical. Let's talk about the specific triggers to watch, and maybe, more importantly, how to time the trade. So I see the trade unfolding in 2 distinct phases. Phase 1 is what I'd call peak panic. That's the first couple of weeks where the market just sells everything off indiscriminately. That is your window to short the most exposed names. But then comes phase 2, the supply lag. This is from about week 3 to week 8. This is when reality sets in. The market finally does the math on those energy reserves, realizes the shutdown is for real, and starts to aggressively, and I mean aggressively, reprice the winners and the losers. So, what are the critical triggers to watch? These are the specific, real-time data points you need on your screen. Forget the headlines. You need to be tracking daily tanker traffic through the strait. You need to be watching war risk insurance premiums for ships. Monitor every announcement from Taiwan's energy ministry about their reserve margin. And of course, any new force majeure declaration from a petrochemical firm in Asia that is a massive signal. These are the real tells that the next leg of this crisis is about to begin. So let's wrap this up. The key takeaway here is not that the AI boom is over. It's not. But the physical constraints of energy and geography are about to assert themselves in a really brutal way. A massive capital reallocation is coming. There's no doubt about it. So the only question you really need to ask yourself is, are you positioned for that shift?